Hi class, today we're going to be looking at Chapter 5, Problems 12 through 15B. I'm going to share my screen with you. So you should be able to see problem 5-12B in the Excel spreadsheet that I prepared for you. The following unemployment tax rate schedule is in effect for the calendar year 2021 in State A, which uses a reserve ratio formula in determining the employer contributions. This table here is given to you to help you to determine how to calculate the SUTA tax rate for your company. And so they've given you this table right here that we're going to use in just a minute. And then for the rest of the problem, it says Conrad Company, which is located in State A, had an average annual payroll of $1,150,000 for the 3 12-month periods ending on June 30th, 2020. The computation date for the tax year of 2021. As of June 30th, 2020, the total contributions that had been made to Conrad Company's reserve account in excess of the benefits charged amounted to $21,560. So what they want you to do is they want you to calculate Conrad's company's reserve ratio for the year of 2020. And there's a formula that will help you to calculate this reserve ratio. The formula is the contributions in taxes that your company pays in versus what benefits, unemployment benefits are paid out, are going to be divided by your average payroll for 3 years. And so what they have done is they've given you the amount of contributions less the benefits paid. They told you that the reserve account had a balance of $21,560. So that balance is contributions that were put in that they made as a company through their payroll taxes versus the unemployment benefits that were paid out. And so that's the balance in their reserve account. We're going to divide that by the average payroll, which they gave you as 1,150,000. So to get the reserve ratio, you're going to take the 21,560 and divide it by 1,150,000. It's a percentage at 1.8%. And what this does is this tells you on the table where to go. So in other words, 1.87, we want to look on our table that we had here, and we want to go to the brackets that fall within 1.7. So it's from 1.6% or more, because it's 1.7, but it's less than 1.8. So the contribution rate is 5.50%. This is the amount of the state unemployment taxes that this company is going to have to pay. So this chart shows you how you can figure your state unemployment tax rate. So 5.2% is the contribution rate for 2021. In Part C, they want you to find the smallest contribution that the company can make in order to reduce its tax rate if state A permits voluntary contributions. So some states will allow companies to volunteer to contribute more to the state unemployment tax fund than what they have to. It's called voluntary contributions. If a company will voluntarily contribute more to the tax fund than what they actually owed, they give them a tax break in the next period of time. So this Part C is going to ask you what's the smallest amount of contribution that this company would have to make in order to reduce its tax rate for the next period. And the way that we do that is we use our tables. Remember that we had a contribution rate that we calculated in A that was, or the reserve ratio, I should say, that we calculated in A was at 1.87%. And you'll remember that that fell in between 1.6 and 1.8%. So we know that the contribution rate was 550. Now, if we wanted to lower our contribution rate, we would simply go to the next bracket. And so that's what they're asking you to do so that you can figure up the smallest contribution that you're going to need to make in order to reduce the tax rate. So we would go to the next bracket, which starts with 2%. So we're going from this bracket right here down to the next bracket of 2%. So 2% is going to be multiplied by the average annual payroll, which they gave you at 1,150. That would be the balance that you need to qualify for the next lower rate, which is 4.9%. So if you multiply 2% times 1,150,000, it's going to give you a balance of 23,000 that you need. The actual count balance was given at 21,560. The difference between these is the contribution that you need to get you to the next tax bracket. So if this company contributes 1,440 extra dollars, then they can go into a lower tax bracket during the next period of time. In Part D, they're asking you to find the tax savings that is realized by the company, taking into consideration the voluntary contribution that we found that they needed to make in C. If the taxable payroll, notice it's changing to 1,295,000 in 2021. So basically what you do is you take the taxable payroll for 2021 and multiply that by the SUTA tax rate at 5.2%. That's where you were before you made the contribution. So the amount of taxes at 5.2% is $67,340. If we take that same taxable payroll and we multiply it by the bracket that gave us 4.9% because we made an extra contribution of $1,440, we were able to go to the lower bracket of 4.9%. Multiply that by the taxable payroll, and that will give you the SUTA tax at 4.9%. So this is at the higher rate, this is at the lower rate. And what you got to do is compare those, find the difference, in other words. So if you had a rate that you were paying at 5.2% versus 4.9%, this is the amount of taxes at 5.2%. This is the amount of taxes at 4.9%. The difference is $3,885. But because you had to contribute $1,440 to get the lower tax rate, your tax savings, the net amount of your tax savings is $2,440. So this is showing you that you can manipulate the amount of the tax rate that the company has to pay if they're willing to make voluntary contributions ahead of time to the state unemployment tax fund. Then they will get a lower tax rate, and it could amount to saving them money. So I'm going to move to the next problem, which is also about calculating the reserve ratios and the SUTA rate. In this problem, it says as of June 30th, 2020, the computation date for the 2021 tax rate, Amanda Company had a negative balance of $1,015 in its unemployment reserve account in state A. So in other words, they paid out more than they put in as far as taxes were concerned. They came up with a negative balance, which means they're going to have to pay a higher rate. The company's average payroll over the last 3-month period amounted to $525,000. The unemployment compensation law of state A provides that the tax rate of the employer who has a negative balance on the computation date shall be 7.2% during the following calendar year. So because they have a negative balance, they have to pay a higher rate. They have a higher contribution rate. Again, they've given you a table. And then what they want you to find out is what the smallest voluntary contribution that the Amanda Company should make in order to affect a change in its tax rate. So in other words, if we want to make this go from 7.2% contribution rate to 6.70%, how much are we going to have to contribute? And the amount that we have to contribute is the amount that we were at in a negative balance. Since they told you they had a negative balance of $1,015, we definitely have to get that balance up to a positive number, or at least up to a zero balance. So since the company had a negative balance, the smallest amount of the voluntary contribution will be equal to the negative amount. And if you can pay off that negative amount, you'll get a lower tax rate for the next period of time. In part B, they're wanting you again to figure the tax savings if you made that voluntary contribution of $1,015. The taxable payroll for 2021 is $650,000 this time. So the tax without the voluntary contribution would be figured at 650,000 times 7.2%. The amount of tax would be 46,800. If they paid that contribution amount, this 1,015, to the state government, they'll get a lower tax rate of 6.7%. So you multiply that by the taxable wages, and this is the lower amount of taxes that you would have to pay at a rate of 6.7%. The difference between these is the tax decrease that results from the voluntary contribution. And because we had to contribute voluntarily $1,015, the amount of our tax savings is the difference between these two. So in the next problem, it's a little bit different than the first two problems that we talked about on this video. Mary Givens and Peggy Moser are partners engaged in operating the G&M doll shop, which has employed the following persons since the beginning of the year. These are the employees, and this is the amount that they're paid. Givens and Moser are each paid a weekly salary allowance of $1,000. The doll shop is located in a state that requires unemployment compensation contributions of the employers of one or more individuals. The company is subject to state contributions at the rate of 3.25% for wages not in excess of $10,000. So that's a ceiling toward the SUTA for this particular state. The base or the ceiling is $10,000 of each employee's wages. They won't pay any more SUTA tax above the $10,000 for each employee. Compute each of the following amounts based on the 41st weekly payroll period ending October 15th. Round your intermediate calculations and final answers to the nearest cent and use rounded answers in subsequent computations. And if an amount is zero, just enter zero. In A, they want the amount of FICA taxes. So we're going back to a previous chapter. Remember about Social Security and Medicare taxes. They're wanting you to figure that on the earnings of each person. What you have to remember is that M. Givens, whom you're paying $1,000 as a weekly salary, and Moser is also getting that $1,000. Both of these are partners. So they're not employees. Because they're not employees, we don't pay any OASDI or HI taxes on them. The partners, when they file their tax return, have to pay self-employment taxes. But the partnership does not have to withhold the FICA taxes on the owners of the business. Partners are the owners of the business. But they would have to for T. Ben, and they figured out what the weekly amount of the earnings for T. Ben is. So what you do is you take 6.2%, the percentage for OASDI, and multiply it by $715.38, and that will give you $44.35. You take the $715.38 and multiply it by 1.45% for HI, and that gives you $10.37. So basically, they've given you the weekly taxable earnings, and you had to figure the OSDI and the HI taxes, remembering that none of these employees would make over the ceiling for OASDI and HI taxes. So basically, you're taking each one of these and multiplying it by 6.2% to get your OASDI numbers, and 1.45% to get your HI numbers. And then what I did is I simply combined all these together to get totals. This is what the employees would put in, or these amounts right here. They have to pay that for FICA taxes, which are your Social Security and your Medicare. Now, the employer, if you'll remember, also has to match what the employee puts in. So what you do is you take all the taxable earnings and total it up, and then you take the total and multiply it by 6.2%, and that will give you the employer's share of FICA taxes. These were the employees, and this is the employer's share. The $2,162.30 times 0.0145 gives you $31.35. That's the employer's portion of HI taxes that they have to match with what the employee puts in. In Part C, they want the state unemployment contributions for the weekly payroll period. And so what you really need to know are what the wages are that are subject to SUTA for the 41st pay period. Remember that your SUTA wages have a ceiling of $10,000. So by the 41st pay period, if you were to multiply 715.38 times 41 pay periods, you'll go over this base. So therefore, there is no SUTA that is taken out on employees that you've paid more than $10,000 to, which amounts to all of the employees except Axel. Axel total amount amounted to $98.40. In other words, if you multiplied $240 times 41 pay periods, it will give you $9,840. So his entire pay for the 41st pay period is subject to the SUTA taxes. So the total wages that are subject to SUTA is just this $240 that we would multiply by the SUTA tax rate that was given at 3.25%, and the amount of SUTA taxes that are owed by this company is $7.80. They also want you to calculate the amount of the net FUTA tax on the payroll. And the net FUTA tax rate is 0.6% on the first 7,000 of wages. And so you can see here where I calculated it on the 41st pay period, all of these went above 7,000. So therefore, the amount that's owed to FUTA on the 41st pay period is 0. All of the wages were in excess of the ceiling for FUTA on the 41st payroll. The amount of FUTA taxes for the 41st pay period is going to be 0. Then they want to know the total amount of the employer's payroll taxes for the week. The employer put in OASDI of 134 plus HI of $31.35. And they also put in state unemployment tax of $780 for a total of $173.21. And on this last problem, we're going back to figuring the reserve ratios and the contribution rate. We're going to be the Applebaum Security Company, and we're located in state H, which enables employers to reduce their contribution rates under the experience rating system. From 2007 to 2016, inclusive, the company's total contributions to the state unemployment compensation amounted to $18,135 for the calendar years 2017 through 2020. And the contribution rate for Applebaum was 3.7%. In other words, this was their state rate that they were charged. The contributions of each employer are going to be credited to an account that is maintained by the State Unemployment Compensation Commission. This account is credited with the contributions that are paid into the account by the employer and is charged with the unemployment benefits that are paid from the account. So this is an account that you're going to keep up with, or actually that the state unemployment officer keeps up with, so that you can determine the amount of your tax rate for your company. And this is the tax table showing you, or this is the table that they use showing you, if you know what your reserve ratio is, then what you're going to have to contribute as far as SUTA taxes are concerned to the state government. The annual payroll for calculation purposes is the total wages payable during a 12-month period. This 12-month period, I want you to really read this right here because it'll catch you if you don't look at this. The 12-month period is going to end with the last day of the third quarter of any calendar year. So it's not ending on December 31st. It's ending on the last day of the third quarter, which would be September 30th. The average annual payroll is the average of the last 3 annual payroll periods, and the SUTA tax rate for the year is computed using the information available, benefits that were received versus taxes paid as of September 30th of the preceding year. The schedule below shows the total payroll and the taxable payroll for the calendar years 2017 all the way through 2020. And it's showing you the total payroll for each quarter of the year. This is what was actually paid. The taxable payroll is what you have had to contribute to or use to determine what you are going to be paying into the state unemployment fund. This table was given to you in Cengage. For the years 2017, they showed you the total payroll and how much of that was taxable. They showed you the total payroll and how much of that was taxable for 2018. They did the same thing for 2019 and 2020. So what I did is I added all these together to give me my total taxable payroll for 2017. My total taxable payroll for 2018, I added those together to get 47,000. I did the same thing for 2019 and 2020. The remainder of this problem states that unemployment benefits became payable to the company's qualified unemployment workers on January 1st, 2007. Between that time and September 30th, 2020, total benefits amounting to $23,194.15 were charged against the employer's account. So these were the benefits that were paid through the unemployment. Evidently, he had some unemployed folks in this particular company. Hint, first total each year's taxable payroll. That's what I did here. Using those numbers and the suitor rate, you can figure how much has been paid into the reserve account from 2007 to 2020. So you've got to figure out how much you paid in to the reserve account, and then you're going to take away from that the benefits that you paid out. This will give you the balance in the reserve account, which has to be divided by the average annual payroll for 3 years. So for Part A, they wanted you to find the contribution rate for 2021. The amount is based on the total payroll. These are your state contributions for the years. This amount was given to you. And then in 2017, what they did is they multiplied the taxable payroll amount by 3.7%, the given rate of taxes, the amount of taxes that they contributed to the account in 2017 would be $1,794.50. Each year's taxable payroll would be multiplied by the unemployment rate to get the state unemployment taxes. So every year we're multiplying by the state unemployment taxes. So this amount was given, add all your contributions to it, your total reserve is $24,632.20. You're going to subtract out the benefits paid. That will give you the balance that is in the reserve account, which has to be divided by the average annual payroll. So to make this tricky, you had to figure out what the average annual payroll was. They didn't give that to you, but they did tell you that they took the payroll from the last quarter, fourth quarter of the year, the total payroll that they paid, and they would add it to the first quarter, the second quarter, and the third quarter. In other words, 13,000 plus 11,000 plus 11,500 plus 12,750 is the total payroll for 2017. Remember that they made that weird. They said that the last day of the quarter was the third quarter of any calendar year. So in the last quarter of 2017, we're going to combine that amount with the first 3 quarters of 2018 to find the total amount for 2018, which is this amount right here. And I've got the formula for you so you can see how I figured it there. For 2019, you're doing basically the same thing. We're going to have to take the total payroll for the last quarter of 2018, and we're going to add it to the total payroll for the first 3 quarters of 2019. And that will give you this amount right here. Again, you can see where the formula up here is showing you how I get this amount. For 2020, I'm going to take my total payroll in the last quarter of 2019, and I'm going to add these first 3 quarters of 2020 to it. That gives me that. So we're going to, it gives me this. You're going to total all 3 years, add all 3 years together, find a total, and then divide it by 3, and that's how we get the average annual payroll. So we take the total payroll for the 3 years combined, divide it by 3, that's your average annual payroll. We're going to put that in a formula to calculate the reserve ratio. The contributions in versus what was paid out is the balance that would be divided by the average annual payroll that we found. When you divide that, it's going to give you 3.1%. This 3.1% is the reserve ratio that you're going to look up on the table that they gave you. Since it was 3.7%, it falls in between 0% and 7.9%. So the contribution rate is going to be 5.50%. So this is your contribution rate. So the reserve ratio, you're going to look it up on the table above, and this is going to be your contribution rate. This is what they're going to have to pay in taxes as a tax rate for SUTA taxes in 2021. Now in B, they did a what if analysis, and they're showing you the rate for 2000. What's the rate for 2021 if 2,000 additional benefits had been charged by mistake to the account of Applebaum Security Company by the State Unemployment Compensation Commission. And they're telling you here a little hint. They're telling you to add that mistake back to the benefits that were originally paid to get the total benefits that would have been paid if they had that mistake in there. So you add this and this together to get the total benefits that should have been paid. The total reserve balance was $24,632.20. That was given on 9/30. It's that amount right there. That's what we figured a little bit earlier. You're going to subtract out the benefits that should have been paid, what we figured up here, and that threw them into a negative balance for their contribution. So in other words, they have not contributed enough for this period of time. They're in a negative balance. And if you're in a negative balance, according to the table that they gave you, if the contributions fall below the benefits paid, which is a negative balance, the company has to pay 7% as their taxes. Now, you could have done like the other problems, said, well, I'll just go ahead as a company and pay $561.95. Then you go into the next lower category for your state rates. And that's all I want to talk to you about today. So we'll stop sharing this with you, and we'll see you again next time. Bye-bye.